Hello and welcome back to Underdog Investing. So today we're going to talk about the Lemonade stock and some of the reasons why we've seen a decrease in the stock price over the past few days. Before I jump into the video, I'd be grateful if you can smash that like button and subscribe to the channel. So starting with the stock price, as you can see, on the close of Friday the 15th of January, we ended up at $147, and that's around a 6.8% decrease in one trading day. If you have a look at the last 5 trading days, you can see that we actually hit an all-time high on Tuesday the 12th of January of $185. And since then we've seen roughly a 20% decrease in the stock price. That might sound significant, but if we have a look at the longer time frame, you can see that, let's say on the 1st of December, for example, we were trading at $63. And since then we've actually seen a 130% increase in stock price, and that is despite a significant decrease over the past few days. So that's just to give you some longer term perspective on the stock. And moving on to this interesting article by the Motley Fool. So they basically describe some of the reasons why they think the stock price has gone down over the past few trading days. Starting with the first point, Lemonade's share price has nearly tripled since the beginning of November. So it's very normal to see the price of a stock go down slightly after you've seen a significant run-ups, and this is just a normal correction and it's healthy for the stock. Second point is that Lemonade recently sold 3.3 million new shares to raise capital to fund its growth. And again, anytime you have a company which is very young and high growth, it's very normal to see these kind of stock offerings. And I actually quite like seeing stock offerings because, firstly, it's good for a company, especially when they've had a significant run-up, to offer shares. Because firstly, that results in minimal dilution because the company is actually at a higher valuation, so that dilution percentage is actually lower. Secondly, it causes a drop in the stock price despite the fundamentals being the same. And if anything, the fundamentals are better now because we've got more capital to be able to promote that growth. So if anything, it creates an excellent buying opportunity. Or if you already have some of the stock, it allows you to add to your position. And finally, the third point is that Citron Research, which is a short seller, on Thursday said on Twitter that Lemonade is something special and predicted that the stock will fall back to $100. Now, Citron Research is a short seller, so basically what they do is they usually target young companies with high growth potential, because these stocks are generally more volatile in the short term and in the early phases of the company. What they do is they put bad news out and they basically profit from the stock price actually going down. So again, it's very normal to see short sellers in companies with high growth potential, early stages of their company. We saw a lot of that with Tesla in the initial stages of the company. So looking at the Twitter on Citron Research, they actually released a video, a 7-minute video detailing some of the reasons why they thought the Lemonade company was bad. And just to go through some of the points, they basically said Lemonade is nothing. There's nothing special about the AI machine learning. They're the same as other insurance companies. They're trading at too high a multiple, and this whole charity thing is all for show. So these are the kind of things they talked about. One of the interesting things he talked about in the 7-minute video is that he advised people that if they wanted to invest in a company which does good, to invest in McDonald's. Now, this takes away all the validity of anything that he's ever going to talk about, personally for me, because it doesn't take a genius to realize that McDonald's has contributed significantly in terms of heart disease, obesity, things like cancer over the past few decades. So, to me, he's just a joke. And something to back it up. So Citron Research on the 4th of February 2020, they put out this tweet. "We love Tesla and promise never to be short again. But when the computers start driving the market, we believe even Elon would short the stock here if he was a fund manager." So basically, he's telling people to short the stock on 4th of February 2020. And if we have a look at the Tesla stock, you can see that on February 4th, 2020, we were trading at $177. And since then, the stock's gone up to $826 in less than a year. So it's actually increased by around 365%. So that says something about this person's track record. Finally, just to talk about some good news with Lemonade and some of the things that we can look forward to in 2021. Firstly, racking up the customer count. I mean, I'm sure most of you already know in December, Shai Winiger, who is basically one of the co-founders of Lemonade, announced some very exciting news that the company actually reached over 1 million customers in December. And the great thing about it is it took less than 5 years for them to achieve that, whereas other industry leaders previously took significantly longer. For example, Geico, it managed to achieve 1 million customers in 28 years. State Farm, it took them 22 years. So there's actually very good news for Lemonade. Another interesting point here. So what the Motley Fool are saying is that 12% of renters insurance holders have actually graduated to homeowners insurance, which means that for the original customers and their $150 policies, the company gets their $750 upgrades for free. So that's very interesting in itself. The other thing is that Lemonade launched pet insurance in July, and it's actually developing a term life insurance program, and this is actually an $800 billion market. So this is very exciting for Lemonade to go into the life insurance market very soon. Secondly, their loss ratio. So their most recent report, Lemonade mentioned that their gross loss ratio was 72%, and this is 7% lower than the previous year. What's really interesting is that the industry average gross loss ratio is actually 82%. So in such a short period of time, Lemonade's managed to be significantly better in terms of loss ratio than the industry average. And finally, opening in more markets. As I'm sure most of you are aware, Lemonade is actually currently only operating in just over half of the US states. And not only that, in terms of Europe, they've only expanded to Germany, Netherlands, and France. So they've still got significant market share to capture in the future. So there's lots of exciting times ahead. Now, just to look again at the stock price, I just want to finish with the fact that short term, it's very difficult to say what's going to happen to the stock. But long term, I'm still extremely bullish about this stock. So that's the end of the video. If you enjoyed it, I'll be grateful if you can like and subscribe to this channel. I would love to hear your thoughts in the comments down below. And if you found it useful in any way, I'll be grateful if you can share this video. Thank you.